Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Meta's stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. You probably all know Meta is my #1 stock. I always pump up this company because they're amazing. I know lots of you made money when the stock dropped below $100. I'm bullish. I'm always buying this stock. Let's get started with the model. This is a large cap company, 861 billion market cap. They're trading at $3.35 a share, and they have 2.6 billion shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. This is the definition of a cash cow. Look at their free cash flow, $23 billion. It jumped up to $39 billion in 2021. It dropped to $19 billion. They invested a lot into the metaverse. That didn't turn out so well, but now it's back to $38 billion. They're so profitable because most of their revenue is ad space, which is almost all margin. When your revenue is making a car like Tesla, there's not that much left over because it's expensive to make cars. There's a lot of infrastructure, a lot of manufacturing. Nothing wrong with making cars. It's just that the margins for Meta, for Google are amazing because selling ad space is so easy. It's so cheap. Doesn't take much overhead or maintenance. Net income is the profit or loss on the income statement. It's revenue minus expenses. And you can see how profitable they are. Almost 40 billion in 2021. 30 billion in the trailing 12 months. Revenue is a sales for the company, and they had their best revenue ever, 127 billion. They might be 200 billion of revenue in 3 years. We estimated 4 years of future free cash flows. We also estimated the terminal value of all cash flows past year 4, that's 1.3 trillion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $1.1 trillion. We divide that by 2.6 billion shares. And we get a calculated stock price of $4.38. They're trading at $3.35, so they're trading at a 24% discount. It's a strong buy according to the model. I would say my price target is a year out. Anything can happen in the next few months, but if my target does hit, it should take about a year. But if there's a huge bear market, of course, I'm going to be way off. And if it's a huge bull market, I might be way off in a good direction. It might hit $500 a share. There are 58 companies in the same industry as Meta, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. Google and Meta spend almost the same exact amount in CapEx. They're both investing a lot for growth. And this is why content companies are so profitable. They don't need much debt. Look at the debt to equity ratios. Most of them are 10%, like Google. Meta is 30%, which isn't that bad because you might see some companies at 100%, 150%. 30% is nothing. They don't pay a dividend yet. They may in the future. They generate lots of free cash flow, second to Google. They're about half the size of Google, but both Google and Meta are in the top 10 companies in the world. For the size of the company and the amount of revenue and free cash flow they generate, they have pretty attractive price multiples. Their price multiples used to be triple digits. Look at their PE, it's down to 29. It was under 20 last year. Look at Baidu. Looks like a steal at these price multiples. They're trading at 3 times earnings and 2.5 times free cash flow. It's like they're giving the company away. Meta generates a ton of revenue. Look at Google, 300 billion. And both of them are growing a lot. 20% is the 5-year annual revenue growth rate. 20% is a good growth rate for a company at 1 billion. At 800 billion, it's an amazing growth rate. Let's take a look at their 10Q for 9/30/2023. We'll first look at the income statement. Top line is revenue. Their revenue for the trailing 3 months to third quarter of 2023 is 34 billion, up from 27 billion. That's up quite a bit, about 6.5 billion. That's a growth in the low 20% range. And for the trailing 9 months, it's up 84 billion to 95 billion. Let's see if they give a breakdown of this revenue, the 34 billion, so we know what it is. It's almost all advertising, 33.6 billion, $300 million from other revenue, and $200 million from Reality Labs. Hopefully that grows. And the great thing about Meta is their product is easily sold all over the world, and they're popular all over the world. About half the world uses their platform, either Facebook or Instagram. $13 billion of their revenue is US and Canada, which is up from $12 billion. $7.5 billion in Europe, up a lot from $6 billion. $10 billion in APAC, up from $7 billion. That's up about 40%. And the rest of the world, nearly $4 billion. It's just such a great company, Meta. The revenue from the apps, the advertising, is $33.9 billion. Half of that is profit. But Reality Labs, small amount of revenue, $200 million. They're still running a loss, $3.7 billion. But they could carry that loss because they're so profitable. Let's go back to the income statement. All the expenses directly related to generating the revenue, $6.2 billion. R&D, $9 billion. Marketing, $3 billion. G&A, $2.1 billion. So total expenses, $20 billion. Operating income of $13.7 billion. Great margins. Their operating income last year, the third quarter of 2022, was $5.7 billion. Their net income, $11.6 billion, up from $4.4 billion. For the trailing 9 months, it's $25 billion, up from $18.5 billion. Their EPS is $4.50, about 2.5 times last year of $1.64. And they're lowering their shares outstanding. It was 2.7 billion, now it's under 2.6 billion. Let's look at the balance sheet. Current assets of 78 billion, current liabilities of 30 billion. So their current ratio is well above 1. It's well above 2. They can easily cover their current liabilities with their current assets. They always have a ton of cash on their balance sheet, 37 billion. And it's not just sitting in cash. Most of it is in money market funds, which is earning them 4 or 5% interest. They also have $1.5 billion in US government securities and a small amount in time deposits and corporate debt. They also have $24 billion in marketable securities. So that's like $60 billion of cash. Because marketable securities and cash equivalents is pretty much cash. Because if you own stock in a company, that's like cash. You can sell it at any time and get the cash. It's not like owning real estate. You can't just sell real estate at any time. Marketable securities are highly liquid assets. 13 billion of accounts receivables. This is how much money other companies owe them when those companies buy on credit. They're not just companies, they may be customers as well, individuals. They have lots of property and equipment, 91 billion. Goodwill, 21 billion. Goodwill is the premium you pay when you acquire another company. They acquired Instagram for $1 billion. That's considered the best acquisition ever. Instagram is probably worth like $50 billion, maybe $100 billion. 216 billion of total assets, 73 billion of total liabilities. They have 75 billion of retained earnings. Retained earnings is the sum of all their prior net incomes. And if they never bought back stock, because when you buy back stock, that lowers your retained earnings, it would probably be like 500 billion. Let's look at the statement of cash flows. And this shows us the trailing 9 months, not the quarter. The first section on the statement of cash flows is operating cash flow. That's how much cash the company generates from its operational business. Operating cash flow is net income converted to cash. You start with net income of 25 billion. You add back the non-cash items on the income statement. Depreciation, amortization, 8 billion. Stock-based compensation, 11 billion. You adjust for changes in working capital. They had a cash inflow of 5.7 billion from accrued expenses and other current liabilities. So even though they reported net income of 25 billion, they actually generated 52 billion of cash flow. Unbelievable. That's a ton of cash. Some companies have been around 50 years, and if you take all the cash flow they generated in their history, multiply it by 100, you're still nowhere near this company's trailing 9 months. That's a big jump from last year of 36 billion. In their investing section, they invested a lot in PP&E, 19.6 billion, down from 22 billion last year. In their financing section, we could see their stock buybacks. Last year it was 21 billion. Now it's 14 billion. It looks like they're adding debt. They added 8.5 billion of debt. Let's look at them on Simply Wall Street. Last price, 335, 860 billion market cap, up 2% in the past week, up 200% in the past year. Let's learn a little more about the company. Meta engages in the development of products that enable people to connect and share with friends and family through mobile services, personal computers, virtual reality headsets, and wearables. It operates two segments, Family of Apps and Reality Labs. Family of Apps offers Facebook, which enables people to share, discuss, discover, and connect with interests. Instagram, a community for sharing photos, videos, and private messages, as well as feeds, stories, reels, video, live, and shops. Messenger is a messaging application for people to connect with friends, family, communities, and businesses across platforms and devices through text, audio, and video calls. And WhatsApp, a messaging application that is used by people and businesses to communicate and transact privately. The Reality Labs segment provides augmented and virtual reality related products, comprising consumer hardware, software, and content that people feel connected anytime and anywhere. They were formerly known as Facebook and changed its name to Meta in 2021. They were incorporated in 2004, headquartered in Menlo Park. This equity analyst has them valued at $500, and another equity analyst has them valued at $185. Someone's going to be right. I hope it's this one. I remember when they IPO'd because I bought a lot of the stock, and I bought it at $40, but it looks like they IPO'd at $34. And then after 6 weeks, I was down 40%, and people were telling me, I told you shouldn't have bought that stock. And then I sold it a few years later to start my business. I made about a 400% profit. And I ended up buying back in, I think at $190. I bought it quite a bit. Then I bought a lot at $335. So I'm pretty much flat on that $335, but I'm up a lot on the $190. Plus I made probably $100,000 on my initial buy. But it got close to $400 at its peak, and it fell below 100. And I wish I bought a lot when it was below 100. But I was so invested in it already, I already owned a couple $100,000 worth of the stock. But now we're all happy. We're all laughing at everyone who said they're going to go bankrupt, it's going to go to zero. Simply Wall Street's valuation is $524. They say the stock is 36% undervalued. 51 analysts price the stock at $372. So it looks like most people are saying the stock is undervalued. Look at their revenue in 2012, $5 billion. 2 years later, it doubled to $10 billion. That was in 2014. It doubled again in 4 years to $20 billion in 2016. The following year, it doubled again to $40 billion in 2017. 3 years later, it doubled again to $85 billion. That was in 2020. Now it's at $127 billion. This is the trailing 12 months number. The forecast for 2025 is $168 billion. With all the inflation, I don't see a reason they can't surpass that number. I think by 2025, they're going to be close to $200 billion. This red line is their debt. They had $1.5 billion of debt when they IPO'd. They paid off their debt, and they were pretty much debt-free for about 8 years. They added $9 billion of debt in 2022, added another $9 billion in 2023, up to $18 billion of debt. It looks like it's a lot of debt, but when you layer in their equity, it's almost like they have no debt at all. $140 billion of equity. And when you look at their cash, the green line, it's higher than their debt. So they could pay off their debt if they wanted to. Because if your friend said to you, I owe $1 million on my home, and you asked, well, how much cash do you have in the bank? And he said $200,000, you would say, that's not bad. But then he says, wait, not 200,000, 200 million. And you're like, oh, so you're debt free. It's a big difference when you see how much cash and equity someone has. When you look at a company's debt, if your friend said, oh, my company has 18 billion of debt, you'd be like, oh my God, you're going to go bankrupt. And you go, why? I have 60 billion of cash in the bank. You just can't look at one number. You have to look at the whole picture. Zuckerberg has been CEO for about 20 years. His salary is $1 a year. Total compensation is $27 million with all the stock options. There's been lots of insider trading in the past 12 months, no buying. 2/3 of the company is held by institutions, 19% by the general public, and 14% by insiders. Zuck is the biggest shareholder at 13.5% of the company. His valuation is $116 billion. Fidelity owns 5% of the company. JP Morgan 1.4%. BNY Mellon 0.6%. Eaton Vance 0.5%, Invesco 0.5%. They employ lots of people. It was 4,600 in 2013. It peaked at 87,000 in 2022. It is down to 66,000 in 2023. I can't stand when people talk negatively about people like Zuckerberg. I bet you those people have never created a job for anyone. The people who complain don't know what it's like to grind it out and to build wealth. This guy has created 66,000 jobs. That's 66,000 people that can support themselves and their families and give back to the community in terms of taxes and also buy things within the community because now they have money. And that money creates jobs as well, because when you shop at a store, the more people that shop at that store can sustain their business and hire people. Of course, the stock trades in lots of places: the Nasdaq, Deutsche Börse, Xetra, Mexican Bolsa, Santiago Stock Exchange, Swiss, London Stock Exchange, Lima Bolsa, Borsa Italiana, the Vienna Stock Exchange, Kazakhstan, Ukraine, Bulgaria, BATS Europe, Sao Paulo Bolsa, Buenos Aires, and the NEO. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.